Are you a Toronto landlord keeping your residential property empty? Or maybe you're a massive tax prep company and the IRS just cooked a free filing tool? Here are two stories that will pique your interest as a landlord or major tax preparer. Hello everybody, welcome back to Things from My Newsfeed, and we'll just get right into it. Huge tax prep companies paid $6.8 million last year on lobbying against the IRS Direct File program, with Intuit, the makers of TurboTax, dropping $3.8 million and H&R Block dropping more than $3 million. A non-negligible amount of money, or at the rate things are going right now, essentially buying breakfast for their lobbying targets. So it's no secret that US tax preparation is tedious and complicated. Doing your taxes has been consistently referenced as either being incomprehensible, annoying, or the subject of stress to meet deadlines, or just thinking of a number. And that's where hundreds of CPAs or other professionals that help you do your taxes at a federal and state level, navigating the US tax code, which I had my first brush with not too long ago, and I can tell you, it's not easy. Filing taxes with an accountant has been the move for some, but for others, it's filing by themselves. And for a while, it's been with printed forms that you had to have figured and filled physically, until they went to digitally fillable forms. And later, softwares like TurboTax, H&R Block software, or TaxSlayer cropped up with their offerings and services like an on-demand assistant or audit support. No matter how sophisticated the software got, the underlying problem still remained. Taxes are still complicated. Now, I can get into the whole history and controversies with these companies lobbying against tax simplification. In fact, I'll get started on that video as soon as possible. But let's narrow it down today. The IRS Direct File software is basically what these private companies have been doing, except free. Well, not free, because your tax dollars fund the IRS. The software offers the same step-by-step digital filing method, guides through the process, and tracking of your completion, with all the bells and whistles to make sure your numbers add up. Attach any proof you need for certain fields, and ultimately provide a summary of your return, not to mention the digital submission to the IRS. All this with the added bonus of an IRS customer service rep connection if necessary. Even smartphone access?
That's pretty good.
This is also the stuff that these companies charge you to access through their software. Though the bonus is that they're independent from the IRS, and the author of this insight speculates that private competition between these companies spurs innovation. Anyways, back to Direct File. This software has been in development for a while, and it's meant to be a free, direct alternative to the paid software provided by the private companies. Prior to this, there had been a free file agreement with private software companies that essentially allowed individuals under a certain income threshold to essentially file their taxes for free with the partnered firms. The major caveat being that these individuals would have to incur costs separately to get help from the firm or an independent CPA. Now that the IRS is piloting the Direct File software, which is open to people earning less than $200,000 if you're signed up, this issue of filing help is solved by being in direct contact with an IRS rep. How does this affect US taxpayers? And what does this essentially do for the average US taxpayer? Well, it opens up another option to file taxes efficiently and a completely free alternative to private firms, unless you're earning more than $200,000, or if you're married to someone earning $200,000, or if you're married and earning more than $250,000. Now, the Direct File program is not generally available. You first have to be in one of the 12 states where the service is offered, and even then, I believe you still have to sign up for it, as it's still in its pilot stages. With the lobbying potentially slowing its rollout and development, everyone else may see it further down the line. In the end, if you're in, congratulations. But for the rest of us, we'll have to keep using other methods to file our taxes. Now, if you're a major Toronto landlord and you're leaving your residential home vacant, then you may have some trouble. Property taxes have been around in many forms for a while, as a form of direct taxation based on the value or perceived value of a property owned by the taxpayer. Toronto levies a vacant home tax, which requires property owners holding residential property to declare the occupancy status of their properties that aren't their principal residences of permanent occupants or tenants, or properties that are exempt or don't require declarations like multi-residential or commercial land, or property classified as vacant land and parking spaces. This tax is based on an assessment of property value through a current value assessment on all Toronto residences that are declared, deemed, or determined to be vacant for more than 6 months in the previous year. It's then calculated to be 1% of that current value assessment for the tax years 2022 and 2023, but 3% of that current value assessment from 2024 onwards. On a property that's worth $1 million, that's a whole $30,000 on top of your income taxes. Not to mention, that might be cash you don't have in hand. You can buy a car with that. Property taxes are meant to be a form of progressive taxation levied on those who are traditionally viewed as having more in society. In modern times, property taxes have cropped back up to do just this, but sometimes, if the legislation and governance is faulty, it would end up being overbearing or require too much compliance to get started and maintained. Not to mention, it may harm the same people the government is seeking to protect and redistribute wealth to. This version in Canada seems to have cropped up to be a progressive tax, yes, but also penalization on keeping homes vacant, in light of the current real estate market and housing shortages. In the end, it all boils down to money and the desire to not lose too much of it for no good reason. So, as it penalizes property owners who have vacant homes that aren't rented out, it encourages them to rent out those properties to avoid incurring the tax. This kind of taxation is clearly super aggressive in achieving its goal, and judging by this comment that the author extracted here, it's an adversarial approach to solve the housing crisis. So this property tax only really affects massive residential homeowners with vacant homes that are required to be declared and subject to the levy. For example, our author makes mention here in his city that certain companies would move into towns and eat up the residential property to subsequently rent out and hold a good bit of units, but keep nearly a quarter empty. By penalizing large-scale owners with an aggressive tax intervention, again, these landlords would be encouraged to rent out these properties. But for average people looking for a home to rent, more properties will be put on the market and become available, as deliberately keeping these properties vacant and not renting them out is exactly what the tax seeks to fight. Now, whether or not it's going to be applied in Sudbury is up to them, but it's well active in Toronto. Any Canadian viewers, let me know in the comments whether the vacant property tax is active in your city, and any major Canadian landlords, be sure to share your experiences with this tax. Anyways, those are 2 interesting stories from the past week. As always, be sure to let me know your thoughts in the comments below. Thanks for watching.